All right, what's up, everyone? I'm Colton, and welcome to Navigating DeFi, a podcast where we walk through DeFi projects and concepts in depth. This week, I'm joined by IceCreamMan, who is the co-founder of Jones DAO, which is a yield, strategy, and liquidity protocol for options with vaults that enable one-click access to institutional-grade option strategies, while also unlocking liquidity and capital efficiency for DeFi options with yield-bearing, options-backed asset tokens. Before we get into the episode, I want to remind everybody that the show notes are available via the link in the description. And without further ado, let's get into the episode. What's going on, Ice Cream? Welcome to the podcast. We have a lot to talk about today. So I think we should start by just doing a general overview of what you guys are building at Jones DAO. So can you start from the beginning a little bit and just give a brief summary of what you guys are working on?
Yeah, I'd love to. Thanks for having me, Colton. Really appreciate it. Our tagline is that Jones DAO is a liquidity, strategy, and yield protocol for DeFi options, right? So what that actually means is that we have a core product suite, which is called the Jones Vaults, which are vaults that, at this point in time, they're risk averse, they're hedged. They run a number of option strategies in a trustless and decentralized way. So we have a number of these vaults, and what users can actually do is, they can deposit, for example, ETH in the ETH Jones vault, and the vault will mint them jETH, Jones ETH. And now jETH is a kind of new DeFi Lego, right? Like it's a yield-bearing token where the yield comes from the underlying option strategy. So it's very similar setup to like staked Lido ETH or Rocket Pool ETH or something. But yeah, so jAssets are yield-bearing tokens where the underlying yield is from options positions. So that's the strategy part, right? The Jones vaults kind of have these strategies, which, sometimes they're algorithmic, and autonomous. Sometimes, they're executed via, smart contract, all of our strategies. And our core strategy contributor team just kind of alters the parameters every now and then. So that's the strategy part. The yield part is that you have these jAssets, right, where the underlying is a, option strategy. And you can actually LP this jAsset with the asset. So what I mean by that is you deposit ETH in a Jones vault for ETH, you mint jETH, and now you can LP together ETH and jETH. And, that way you're stacking like layers upon layers of yield. So in a jETH ETH LP, obviously there's very little impermanent loss because they're similar assets. So you're stacking yield from 1, trading fees in the LP, 2, the underlying options yield, and 3, the emissions that you get on top, which you can later lock like veJONES and so on and so forth. So that's the yield part. Now the liquidity part. So this is actually one of the reasons that we kind of came up with the idea for Jones is that there's a real pain point in DeFi options, which is that, unlike in centralized platforms with DeFi, you got to post all the collateral for every kind of underwriting or loan, borrowing, whatever you do. Um, so in DeFi options, let's say on Dopex, you as an options writer, let's say you want to sell covered calls, what you do is you deposit your ETH and then deposit it at a certain strike and then sell like let's say like a 3,000 strike covered call. So the collateral you posted to be able to do that has to stay locked for the duration of the epoch until the option expires. So obviously that's kind of, inconvenient because, like your collateral is locked for a month currently because epochs are like month long. So the problem that Jones kind of set out to solve is enabling seamless liquidity for these option protocols, primarily Dopex. Because now in a Jones vault, when you deposit your ETH, it's being deployed across, a varied options position. And a part of that is writing options, writing calls, writing puts, all sorts of spreads. And inside the vault, that collateral is locked inside of Dopex for, however long it is, like a month. But now that you have the vault token, like jETH, for example, you can just seamlessly hop in and out of the vault. Whereas before, with Dopex and most option platforms, you couldn't really do that. So yeah, so that's what we're kind of doing for the DeFi option space: liquidity, strategy, and yield.
Awesome. And we'll dive into the specifics of all of those in a little bit, but I want to circle back to the beginning before you guys even really launched. And I'm curious why you guys chose to focus on options. Is this like an area of DeFi that you think is still really underdeveloped? I mean, options are some of the biggest, one of the biggest, I don't know what to call them, I guess, trading venues in the world in terms of like traditional finance. And I know they're really popular in crypto as well. But is that something that you feel like has a long way to go in DeFi? Do you feel like you guys are the first step in making that stuff accessible to users? What was sort of the motivation there for building and focusing on options?
Great question. So my background is in kind of, STEM slash TradFi. I'm one of those classic engineering kids who kind of transferred to finance because you're like, like this is this is way better. And then I found crypto, fell in love with it. And because of my background, I think the technical side of options really appeals to me. And also, having run, sort of crypto fund and having been on the crypto VC side, it's kind of obvious to me that the next kind of narrative, is really about derivatives. So, we've had L1s, L2s. Well, L2s is, hopefully currently unfolding. Man, Arbitrum needs to drop a token on another note.
Please.
But yeah, we've had all these narratives, right? NFTs, GameFi. Um, and I think derivatives in general is just a really huge one. And it's kind of an evergreen one because, the derivatives market is like $1 quadrillion or something like ridiculous. So yeah, just an analogy to the size of the market, I think like options and derivatives in general is a huge white space. That's why I kind of, like options in crypto especially and in DeFi especially because in DeFi it's not just options, right? Like you can really crank up the kind of degen level on these technologies and really like engineer new products, like completely new products. Like Atlantic options. You can have interest rate options on like curve pool yield rates. I mean, there's a there's a lot of stuff.
Following on that train of thought, I mean, one of the things that's been fascinating to me is Dopex and their willingness to like double down on Arbitrum as a platform, also their willingness to innovate. And I mean, you guys essentially also are betting on Arbitrum and betting on Dopex. Why do you think this ecosystem? I mean, and then there's Plutus DAO, which is kind of like tapping into both of you guys. So we're starting to see like this big ecosystem pop up around Dopex. Why do you think that is? Do you think it's just because they're really pushing the innovation here? Do you think there's kind of a big opportunity on Arbitrum that hasn't really been capitalized on? What was sort of the logic there behind betting on Dopex?
So I'll start with the why Arbitrum. So man, to be honest, like I mean, if we could keep this on the down low, just for your listeners, I think they know something. I think I don't know, man. I feel like all these big protocols in Arbitrum really do know something
Mm-hmm.
surrounding some sort of plans for tokens and ecosystem funds and all. And Arbitrum is a very pure ETH L2, and I really do like that. But we're not limited to Arbitrum. Like Dopex is on Binance Smart Chain, Avalanche. I mean, we're eventually going to go to BSC, Avalanche, Polygon, Metis, a bunch of different chains. So we have kind of a home base on Arbitrum, but really we're looking to go everywhere. And the reason we kind of chose Dopex is our, I guess, like a cradle, is because perps and futures in DeFi are a fairly one-dimensional thing, right? And on also in the option space, it's kind of one-dimensional with the exception of Jones and Dopex because you just have these protocols either selling like really simple automated covered call strategies or, just basically having pools of capital that sell discounted options to market makers and the end user ends up getting kind of shafted in that trade. Yeah, I really like Dopex because it's not, a kind of misleading type of model. It's actually an exchange, like it's a legit options exchange. And also because it's DeFi, like I said before, you can engineer completely new primitives. So like just with Dopex right now, there's a lot of possibility for using options to act as unsecured loans, because under collateralized loans is like $1 billion problem in DeFi. And I think there's a way for options to kind of provide that kind of service with Atlantic options. We can talk about those in a bit. There's also room for, stablecoin insurance with options. There's room for like 1,000x leverage on curve yield. I mean, it's just from a DeFi degen point of view, which is what I really am at heart. I really do like the platform and the innovation they're pushing forward. I just think it's just been a really long time since I've seen a protocol do like actually new stuff, not just permutations and combinations of what's out there today. So I really do like Dopex because of that. And because of that, I mean, there's a huge layer of complexity that's inevitably going to come. And so you need protocols like Jones to simplify it. Um, at the same time, you need Jones to unlock like liquidity and enable even more sophisticated strategies. So, we have a lot of really cool stuff planned.
I was going to say, I mean, the way that that Dopex is sort of chugging along, they constantly drop these white papers that you have to be pretty big brain to read and understand. And I think it's obvious that while they're doing a lot of stuff that is amazing, and they're doing a lot to make sure that maybe a normal person, for example, could interact with some of the stuff they're building. I think the people who have the most complex understanding of that, or the most in-depth understanding of those products, will be able to get the most out of them. And that's where you guys come in, right? You're able to take those really complex ideas, turn them into a product, and then make that even more presentable to the end user. So on that same note, you guys have vaults. Vaults have strategies underlying them. This is very similar to the Urn model that I think pretty much everybody is familiar with, right? You just kind of deposit an asset to a vault. The strategists handle the rest. What are some of the strategies that are live right now? Because I mean, I'm looking at the average historical return on the ETH vault, for example, and it's yielding like 10.46% APY, which is probably some of the best yield you can get in the space on ETH, if I had to guess. What is the strategy underlying that vault there, and kind of how are these strategies constructed?
The strategies are actually, so the way they work is the vault contract has, a predetermined set of like whitelisted functions. So for example, it can, deposit in like Dopex, like option pools. Well, I mean, SSOVs. Um, it can do stuff on GMX. And so the strategies really span a spectrum. So you have a portion of the funds that are writing call options on different strikes selected based on, some real big brain stuff by the strategy contributors. And then you have a portion of funds maybe, farming somewhere, and then you have a portion of funds maybe on like GMX collecting, interest from funding rates. I mean, so it's a real spread across the whole options and derivative spectrum. And so the Jones vaults right now, they try to take a very risk averse and hedged approach. So with these main asset vaults, the goal isn't really to get those like 50% in like a week kind of option gains, right? Because that's not sustainable. The goal is to get this really scalable, sustainable, low grade risk averse yield, which I think we're doing really well. Which actually brings me to another point, which is that the kind of metagame in DeFi is just money printing, right? It's just tokens. You just print tokens. Everybody goes from one money printer to the next, and just rotate out and back in every now and then. And that's kind of been the metagame for a while, but I do see that shifting. So there are sources of inflationary and dilutive yield, and then there are sources of like hard, just hard yield. So, a dilutive yield, inflationary somewhat, would be rebase tokens or like a tomb fork on Phantom or something, right? That's just inflationary. And on the other side, you have hard yield, which is from stuff like trading fees on AMMs, option premia collected by option writers, like insurance underwriting premium on protocols like Risk Harbor. There's a whole bunch, and I think the latter is really where DeFi is shifting towards. You've probably seen this in the whole APY drop, in like the butterfly emissions, where they're moving to more of a hard yield model with like bribes and farming and all sorts of stuff. So I'm very optimistic for the latter.
I think people are starting to get a little bit exhausted by the current form of yield that exists, because what you quickly realize is that in a bull market, you might be getting, I don't know, 20% yield on your stables or whatever if you're farming curve and convex, but then as soon as the price drops on those tokens, your yield just gets absolutely destroyed. And that's where this sort of hard or real yield comes into play, in that you know that the yield you're earning is sustainable and is from real demand, and it's something that you can sort of create over and over again, right? You're not relying on token emissions or hoping that token emissions change or whatever. And so I guess that's a cool aspect of these vaults then, is that the yield is actually what we'd consider that hard yield or real yield. This isn't you guys just inflating it with Jones tokens. Is that correct?
Yeah, of course. So the 10% is the 10% on the vault is just the pure vault yield. Like, that's just the options yield. If you want the Jones token yield, which it's good to throw in there, you go to the farms page and you kind of stake your jAsset LP, and then you get another 10% in Jones tokens on top. So overall, that's like 20% in ETH yield. Half of it inflationary, half of it options yield, which is is pretty good. And eventually you'll be able to lock those Jones tokens for revenue and so forth.
Yeah, no, that's a really good mix. I mean, I think people would be happy to hear that, especially if the other 10% is sort of like in Jones token, especially if they're bullish on the platform. But the other cool, I mean, you just kind of touched on this, is the other cool part is the J assets, right? So whenever you deposit to one of these vaults, you get J assets, which basically represent your share of the vault. And this allows you to essentially exit the position early if you wanted to. You can leverage up your position in the vault. What are some of the current use cases of J assets? I mean, I touched on a couple of them just now, but how do you see use cases of J assets evolving into the future?
Yeah, that's a really good question. So the first use case is kind of stacking multiple sources of yield. So when lending pools on Fuse go live, you'll be able to use jAssets for, as I said before, like what was it, options yield, like jAssets LPs for like trading fees, Jones emissions, and then lending yield. And there's really no place in DeFi where you can stack all of these yields in just one position, and
Mhm.
that's what we're kind of hoping to enable. Another use case of jAssets is, if you analyze the underlying like option spread of the jAsset, you can then, I mean, for more sophisticated players, you can then take out a loan against the jETH, for example, and hedge that, or leverage it back, like you said, and do just lots of capital efficient things.
Are there currently any products on Arbitrum that allow you to use these J assets as collateral, or is that something that's kind of coming in the future? Because this is like a really cool use case, I think, that people should be pretty interested in, especially since, you know, generally you don't want to add collateral types that are sort of on the long tail, right? So like scaling up collateral types for collateralized borrowing protocols can be pretty difficult because they just don't want to add assets that are inherently risky or maybe have like a really small market cap or whatever, that that are prone to 20% price fluctuations. But with something like a J asset, I mean, generally these options vaults are going to be for assets that already have pretty big market caps. They have established liquid markets, and then on top of that, J assets are a yield bearing asset, so they're a little bit even harder than the underlying in some ways. Do you think that's something that collateralized borrowing protocols will latch onto? Do you think it's something they'll have to get used to, or do you think somebody will have to spin up collateralized borrowing protocols that focus on these type of assets? How do you see that future evolving?
Yeah, so that's really exciting because we're currently working on some Oracle solutions to allow, protocols that shall go unnamed for now, to list J assets as lending collateral or as, stablecoin collateral, for all sorts of things. So the kind of bottleneck slash roadblock on that is we're currently building an Oracle which analyzes the live PNL of the underlying strategy. So you get like a live value for how much like one jETH is worth, including like how the intrinsic value of the options. And once that's done, we'll enable them for stablecoin collateral lending on lots of different platforms.
How are these J assets effectively priced? Like, is it if the performance of the vault is doing really well, then the J asset is worth more. If it's not doing so well, it's worth less. I mean, is that the general idea here of how you think it'll be priced, or are there other factors that are really important to consider?
That's pretty much the gist of it. Like, if you staked in the staked ETH and ETH curve LP, you know that the value of the staked ETH is meant to appreciate over time. So it's like the APY like is 5%. So the value appreciates by 5% per year. Um, with jAssets, it's similar. So the peg of 1 jETH to ETH changes. Like currently, let's say it's 1 jETH to one normal ETH, and the vault prints like 1% that epoch. So next epoch, the peg, would likely be 1.01 ETH to 1 jETH. And then if the vault makes a loss that epoch, then the peg changes downwards, and it's just the 1 jETH is representative of the yield basically plus
Cool.
the value of the ETH.
So it's pretty straightforward. It's just a matter of like actually getting implementation done, which makes sense, and that's always the hardest part with oracles. I mean, because
Yeah,
the consequences of messing up an oracle are never great. So the next thing I'm interested in is you guys have two types of vaults. Only one type is live right now. So there's the primary vaults, which are basically relatively straightforward, as you mentioned, risk off style strategies. But then the documentation mentions auxiliary vaults, which will be live in the future, and they're a little bit more risk on, maybe a little more exotic. But what are some of the strategies that you guys have been bouncing around, to the extent that you can leak some alpha here, for the auxiliary vaults, and how are those strategies uniquely different from what's going on under the hood in the primary vaults?
yeah. So the auxiliary vaults, what we're looking to do with those is basically build products that have never before been seen in DeFi, right? And we're kind of working behind the scenes on that. I mean, we're working very closely with a number of protocols and a number of key people to get that stuff off the ground. Um, so I can actually share one of the really cool things that we are gonna drop soon. So this is secret alpha. Uh, let me just pull something up real quick. Yeah, like as I said before, what we're building right now, there's not really any kind of protocol doing it. So I'll tell you about something we're close to shipping, which is the Jones Synthetic Options LP. So I'll break that down. So LPing in DeFi, it's like, it's really common. It's a very good way to generate yield, and a lot of people do it, but a lot of the more sophisticated players know that it's kind of broken, in the sense that the risk reward you get for LPing isn't that ideal, because LPing is more like selling covered calls or cash secured puts, except you don't really get the premiums up front like you would if you just sold covered calls or sold puts. So for most assets, like let's say like a ETH to SDC or a BTC ETH LP, the APY rewards that you get aren't really worth taking on, that kind of additional risk. Plus, there's the whole thing about impermanent loss, and if the LP isn't in a defined range, I mean, with V3 and stuff. Yeah, LPing in DeFi is kind of broken, right? It's been the default for so long. Um, but I think it's really time to revolutionize that. And so what we're building is the Jones Synthetic LP, which it's this vault that replicates the payoff structure of a normal LP position, but it does that by writing calls on the underlying asset. So for example, in the ETH USDC LP, a synthetic LP would take that ETH, and it would write a bunch of covered calls with that ETH at varying strikes. Um, and it would take that USDC and write a bunch of cash secured puts at varying strikes. And by selecting the strikes according to kind of some models that we're working on, you can replicate like very, very closely the performance in terms of like just the structure of a normal LP. But what's actually great about this is that if we do this on Dopex, if you write covered calls on ETH on Dopex, the ETH isn't just sitting there, waiting for, calls to be purchased against it. The ETH is sitting in some kind of farm, right? And same with the cash secured puts, like you deposit your USDC, but that's not just sitting there, that's sitting in Curve. So again, you have this concept of stacking multiple forms of yield. So in a Jones synthetic LP for ETH and USDC, You'd be earning yield from like Curve, you'd be earning yield from whatever farm the ETH is inside. And then, so that involves emissions, trading fees, and obviously the options premium on top. And then even on top of that, you have Jones emissions and eventually bribes and stuff we're working on. So, with all these calculations in mind, it turns out that if you kind of assemble this exotic synthetic LP vault, at times you can get either the same or up to 25% more yield on like your LP position versus if you just normally LP. So, for example, in a model that we tested in, I won't specify the range of time. If you were LPing during this time period, let's say you made, it was like 120%, in a normal LP, including the rewards and the asset appreciation. If you were in a like Jones synthetic LP at that time, you would have probably made upwards of 140, 145% on that same position. So the difference in the potential to generate yield, this kind of synthetic position is it's a lot, right? And we've spoken to a lot of big players, and there are a lot of people kind of excited for this and ready to use this because, as I said, like LPing in DeFi is kind of broken, and the payoff structure in LPing and the risk reward isn't that great. So by actually taking it for what it is and assembling like a synthetic options position, you're getting a much better yield, right? And what we really plan to do is just vamp up a bunch of TVL from like various dexes and just chuck it in the synthetic LP. Yeah, so that's an alpha leak for a new product that's, it's not being done in DeFi.
That's really insane. I'm trying to like wrap my head around the idea a little bit. And so a lot of people who, or at least my understanding is a lot of people who like to LP for these more risky pairs. I mean, I think basically any pair that is non-correlated is generally considered a risky pair due to the impermanent loss risk. So for example, like ETH and USDC would be an uncorrelated pair, for example. But every once in a while, and maybe more frequently than not, the ETH USDC pair could have pretty high APY. The only problem is you take on a lot of impermanent loss risk. So you're saying these synthetic option LPs can basically allow people to go sort of long that liquidity pair without actually taking on that same type of risk. Is that how it works?
Yeah, exactly. So with a synthetic LP, you get, oftentimes the same, if not like 25% more of the yield. Um, and the impermanent loss is kind of smoothened out because let's say like the LP is in a certain range, and like when you sell calls on the ETH in the synthetic LP, let's say a portion of your calls are above that range. And so if the price stays in that range, it means that, a portion of your calls don't get assigned. Um, so you kind of keep the premiums collected, and that smoothens out your downside, and that smoothens out your impermanent loss. So yeah, over the long run, in a kind of kangaroo-ish crab market thing, your impermanent loss is greatly reduced.
That's actually really cool, and I'm like pretty surprised by the ability to construct a position that's similar to LPing through options. I mean, actually, I'm not as surprised because I saw there was this talk at ETH Denver that somebody they actually were building some sort of options protocol using strictly just Uniswap V3 positions, and that was the first time that I can kind of like open my eyes to this potential that LPing was really actually similar to certain option strategies, which was something I wasn't aware of before. So I'm not that surprised by the ability to do this, but I'm surprised that you guys are actually like putting it together and making it accessible, which I think is mind blowing because this isn't a simple option strategy, right? And the ability to make it to where I'm assuming it's going to be very similar, just the current vault structure where people can come in with a single asset or two assets or whatever, deposit it to the vault, and then you guys do everything else under the hood. Having that type of accessibility is what I think this industry is all about, like the ability to take this really complex concept, turn it into something digestible. I mean, I'm guessing if this is one of the first like more complex auxiliary vaults, some of the other ideas are even crazier, and you don't have to leak any more alpha than you want to. But how do you guys like get the strategists who are coming up with this? Are they just like kind of migrating to the community themselves? Are you having to seek them out? Like, how are you finding the people who are spinning up these ideas?
Yeah, yeah, so it's really crazy. Yeah, just one more thing real quick about the LP before I answer that is that, yeah, like you said, it's gonna be similar to like a Jones vault structure where you deposit like your LP token from Sushi and the vault just like does its synthetic LP thing. Like, hopefully it'll be automated and somewhat autonomous, and the strategy contributors will just kind of tweak the parameters a little bit. Um, and yeah, like that would mint like a J synthetic, bro. The freaking
Dude,
token names on this shit get so intense. So let's say you have your like Sushi ETH USDC, so that's ETH USDC SLP, and then if you put that in a Jones vault and mint like a corresponding jAsset, you have J ETH USDC SLP, and then you can probably borrow against that kind of LP position, even leverage it up, all sorts of things. Um, so I mean, yeah, the kind of nomenclature around these things is kind of intimidating for new people in DeFi, which isn't another thing I kind of worry about is that we're doing this kind of crazy like DeFi engineering shit, but like who's you know who's gonna use it except like the ultra sophisticated whales? Um, but yeah, I mean that's kind of one of the goals for Jones as well, is to kind of break the stuff down and make it as simple as possible. So theoretically, like my grandma should be able to like put her like pension fund in a synthetic LP position, with the click of a button. Yeah. Coming back to your strategy point, actually, um, yeah, man, it's just crazy because in DeFi there's just a lot of latent talent just hanging around, and we just kind of were like, all right, we're looking for quants and people with options experience, and then like, bro, so many people just come out of the woodwork and they're like, oh yeah, like, oh, I did, like X number of years at this like quant options fund. And we're like, whoa, crazy. Join us, bro. Um, yeah. And the ideas, a lot of it is well, I mean, look, we all contribute, and a lot of it is just iteration between everybody, and like every single person, you're kind of discussing with adds a different layer, and it just becomes this like crazy innovative thing. And our actually seed investors really do help with that. They really do chip in and stuff. I mean, Sammy is very helpful. So is Tetranode, David, Rev Fusion, Small Cap Science, man, I could name all of them. And they're really cool people. And they also help with the iteration on our kind of protocol design.
I know there's a lot of exotic shit in traditional finance, and I was actually talking to Seawalk from DeFi last week, and we were kind of talking about how DeFi is still relatively underdeveloped whenever you compare it to some of the things that exist in traditional finance. How far along do you feel we are on the options spectrum? I mean, are we kind of just tip of the iceberg? Do you think that DeFi allows for much more composability, and so maybe 2 years from now, some of the vaults you guys have will be way more exotic than some of the stuff that exists in traditional finance? How do you see that playing out? Do you see us surpassing traditional finance in that regard, or do you think we still have a ways to go before we catch up with some of the stuff that already exists there?
I think it's it's just a tip, just a tip, bro. Um, and I think in the like the creative sense, yeah, I mean I think in the creative sense, we've already kind of surpassed TradFi. Yeah, I mean, I'm just so bullish on the whole like options thing in general, and I think in crypto, it's kind of inevitable in my eyes because I mean, people are gonna get tired of all this inflationary yield at some point. Well, I might be mid-curving this. Maybe we just go and like, print like different tokens and just hop around to different Ponzi's forever. It could work. But I have a hunch that at some point, DeFi will mature and, it'll focus more on options and the derivative aspect.
actually you may be mid-curving this because we've already gone through like 2 cycles of inflationary and fork-based manias, and so like maybe in the future, while you guys are building these vaults that have real yield, really all of the crazy inflationary stuff just happens with jAssets as like the the form of the base layer for all of that.
Yeah, bro. I mean, look, we're really hedging our bets in that sense because, yeah, we have this like hard options yield, but on top of that, we have a really degen protocol design with like potential for like I don't know like a 120 APY on ETH, in a kind of degen-fied way. So yeah, we're really hedging our bets there. I mean, like I know for a fact that with this token stuff, inflationary shit is gonna be around for a long time, and it's fun, right? Like coming up with these game theory based models is a really cool kind of practice. And so we have a whole tokenomic like suite coming, right? Like it's completely new protocol design, like veJONES. It's just got the name VE, so it kind of invokes some like, oh, hey, you just lock it for 4 years and you just like, get fees. It's not that. Um, so even our VE model, it's gonna be completely different. There's no analogy to it in DeFi today, I believe. We're even trying to redefine that, and yeah, man. There's not much I can say without leaking too much alpha, but yeah. Yeah, so on one side we have this kind of hard, kind of mature yield, and on top of that we have a really cool tokenomic model coming up soon.
We're gonna get into the token. You're not getting out of the tokenomics questions a little bit later, so we'll get into that in a second. One more question I have on the auxiliary vault. So the documentation kind of mentions that they won't allow for the minting of jAssets. So I guess the idea would be people just deposit, and the deposit kind of just sits there. They don't have a way to leverage like they would and with the primary vaults, or they won't have a way to LP like they would with the primary vaults. Is that something that's kind of set in stone? Is that something you guys are changing your mind on, or is that something that it'll just depend on the type of vault? Like, can you go into an example of maybe why you wouldn't be able to mint a jAsset against a particular type of vault?
Yeah, so we've actually kind of changed our tune on that. So one kind of tokenomic leak I can tell you is that um, every single vault that Jones kind of puts out is going to have a corresponding jAsset. And the initial rationalization behind not minting jAssets for every vault is that we didn't want to incentivize liquidity with commissions and just like waste away our token for like every single vault. And so we're kind of giving that choice in a decentralized way to the users of the protocol. Like every vault will mint a jAsset, but it's up to kind of veJONES holders to direct or delegate votes to different like jAsset LPs to like um to give them incentives and tokens and so on. So yeah, I mean actually every Jones vault is going to mint a jAsset.
All right. Well, I'm excited to hear that, and I'll have to yell at Notch and tell him to change the documentation so that everybody knows about this bullish development. Because like I for one was like kind of sad when I read it, because I was like, man, if they come up with some really cool exotic asset that's maybe medium risk and has a pretty good chance of yielding, I don't know, 40, 50% APY, maybe more. I mean, you were mentioning 100% APY earlier on like LP positions. Like the ability to use that style of jAsset as collateral or use it in some other meaningful way, I think is an extremely exciting development for the future of this space. Because I think when I imagine what DeFi looks like in my head 4 years from now or something, it's all about layers, right? So you usually have, let's say in this case, Dopex is sort of, or Arbitrum is really the base layer, and then you have Dopex, and then you have you guys, and then who knows what people are going to build on top of you guys, a year from now or 6 months from now even, or who knows, maybe even sooner. You probably know more than I do. But the ability to use these more risk off jAssets that currently exist, but then the ability to use even more risk on jAssets later opens up all kinds of opportunities that I'm sure you guys are thinking about internally. So I'm excited to hear that more vaults will all have jAssets going in the future. We just kind of hinted at a lot of the stuff in the pipeline. You also leaked a little bit of alpha about the synthetic option LPs. Now I think it'd be cool to talk a little bit about roadmap and where you guys are. Just because people love love to hear about roadmaps for whatever reason. But you guys are relatively young. Right now, I think there's 2 or 3 vaults that are available that are just, I think the ETH vault, the Geom vault, and then maybe the DPX vault, last I checked. You guys also have some of the LP farms that are live. What's next on the roadmap for you guys outside of synthetic option LPs?
On the roadmap, we have deployments to like different networks. So basically multi-chain. We're really bullish on the tech behind layer 0. So definitely watch that space for even, multi-chain vaults. Theoretically, you can have a vault that's just, selling a basket of options across assets on different chains and farming on different chains, and you can have some really cool stuff. So, multi-chain stuff, veJONES, the lending pool is coming up soon, and then stuff related to stable coins and, lending. And, one kind of potential protocol direction. Oh, and sorry, veJONES as well. That's coming. One kind of potential protocol direction. I mentioned Atlantic options before, and what they allow you to do is, let's say you borrow USDC against your ETH, right? And that you have a liquidation price for that. You can purchase an Atlantic put slightly above your liquidation price. And what Atlantic puts allow you to do is they allow you to unlock the collateral that's underneath the put. So like in normal options, when you're selling a put, you usually have to collateralize it with like cash, right? On Dopex, you do that currently. If you want to sell ETH puts, you got to collateralize them. And with Atlantic puts, which are coming on Dopex soon, you can unlock the collateral inside. And so when price drops quite a bit, let's say it goes below the strike price of the Atlantic put, um, you have access now to the intrinsic value of the option. So whatever, dollar amount that option is in profit by, you can extract that out of the option, and then you can stick that into your collateral for your loan. So in a way, that's a basically very liquidation resistant loan. And if you think about it, the more the price keeps falling, right, it can fall like a really long way past your liquidation price. And the put that you have is going to keep being like more and more in profit. So the put's going to keep being in profit, and that profit's going to keep getting transferred to the collateral of your loan. So let's say you paid like $5 for that put. Now that $5 is basically securing a loan that's worth, maybe 2 to 3 times what you actually posted the collateral for. So yeah, in a way, that's kind of like under collateralized borrowing, right? Because for the price of a put, like, whatever, like $1 or $2, $5, you basically don't get liquidated, no matter how low it goes. So the thing that's exciting for Jones is that we can build vaults around it, but there's also the scope of going in the direction of having, like I love how Trader Joe had a DEX and they had a, lending protocol built on top of it. So there's also a direction of going on having a lending protocol inside of Jones, built on top of this stuff where you don't get liquidated, where you can theoretically farm like leveraged farms and use Atlantic puts not to get liquidated on your leverage and stuff. I mean, the sky is really the limit. So, I mean, yeah. I mean, this stuff keeps me up at night because it's just so exciting, Lots of different ideas floating around.
Yeah, I mean, I I didn't even think of the potential for you guys to expand beyond just vaults to, well, I guess in a way, if you could spin up a lending market that's sort of based on vaults that are using Dopex strategies underneath. So in this case, like Atlantic options, using some sort of basic strategy for allowing people to get non-liquidatable leverage, and you guys just provide that in the form of an accessible lending market. And I'm trying to think about how this looks like in my head. I don't know how you guys are gonna make this super presentable so that people can understand it. How do you think a market like that ends up looking like? Because, like, for example, I used to work at Liquidity, where we launched a pretty straightforward borrowing protocol, right? People deposit ETH, they pay a one-time fee, they borrow cash against it. People are familiar with that model. But when you talk about spinning up a lending market that allows people to use options under the hood to get this sort of like non-liquidatable leverage, how do you guys think about taking that stuff and then presenting it to the end user in a way that's digestible? Because when I first of all, I don't think my brain's big enough to understand half of this stuff anyway, but I couldn't even imagine trying to make that presentable to the end user. How do you guys think about that stuff and come up with solutions for it?
Yeah, so our kind of approach is to abstract away as much as possible from the end user. So ideally with like Atlantic backstop backed loans and leverage farms, like the end user shouldn't even have to think about the fact this has got some like weird option stuff going on. They should just see like, holy shit, number go up, I don't get liquidated, I can make more money, and this is really cool. Oh, I just gotta press a button. Oh shit, it's done. Like that that's the kind of approach that I really want. To have as much simplicity in the UI and UX as possible. So with the option with the example of the kind of Atlantic put backed loan, that could be as simple as, like when you uh when you conduct the transaction of like borrowing like 1,000 USDC against like your one ETH, maybe like the protocol just bundles in like a buy order for an Atlantic put, like, so it's just abstracted away from the user and it's made as simple as possible.
That's just insane to me that we're getting to this point now where DeFi can have these sort of arbitrary levels of complexity, and then protocols are finding ways to present that to the end user just simply in the form of 3 buttons and yield. Like recently, I don't know if you saw that there was this chart. It was about tokenomics that went viral. It was basically like this flywheel effect they came up with for CVX and Curve and everything else. And the chart was just insane. Like if you looked at it, it was crazy to look at. It was awesome to follow. And to me, I'm like stoked on that type of stuff. But then people were criticizing, oh, well, this looks too complex for the end user. This is not the DeFi I signed up for. I'm like, dude, this is definitely.
That was so funny to me. I think people were really like, the critics were really like left curving that. Because like, listen, this whole technology of blockchain is basically a distributed ledger, which is a distributed database. So like, y'all have never seen a database diagram or like a flow chart? Like, bro, it's really not that hard to follow. Like, I agree with you. I think they got like an undue amount of criticism. Like, it was completely fine.
Yeah, and all that matters, like, it could be as complex as it wants, because I'm like, okay, this is sick. Like, the fact that they figured this out and it works and it's beneficial to some amount of people is amazing. And then what's even more amazing is that they've found a way to bundle all of that up and then present it to the end user such that they have no idea what's going on underneath it all, which is exactly what you want. You don't want the average user super exposed to everything that's going on under the hood unless they choose to do so. And that's what's cool about what you guys are building, is that Dopex is building all of these really complex tools and interesting tools and experimental tools, and you guys are finding a way to bundle that up and make it presentable and then give access to a new suite of tools. But for the complex user, I mean, odds are like the really sophisticated options trader is not going to use at one of the basic Jones vaults that are available right now, unless they have some other strategy involving jAssets. What they're going to do, since they know how it all works, is they're probably going to go straight to Dopex and implement their own strategy. But for somebody like me, who I just really frankly don't have the time to like dive into options and like come up with my own strategies and do risk analysis and make the spreadsheets, make the Python scripts, do whatever I need to do to come up with a really cool option strategy, I'm just going to throw some ETH into a Jones vault because that's what makes sense for me. So I think DeFi is always going to exist on these varying levels of complexity. And that's sick because users can just choose which level of complexity they want to interact with. And there's something for everybody there.
Yeah, man, I totally agree. And the thing about sophisticated players, so at Jones we're really trying to appeal to kind of both sides, right? So really simplistic, um, like automatically decentralized, trustlessly kind of run strategies for people who just want to set and forget their ETH, or whatever asset. And then for people who want to take a more sophisticated approach, I mean, we're building out this whole suite of like leverage lending, borrowing, like like bribing, like a whole system. So yeah, we're really trying to appeal to both sides. And yeah, I totally agree with you that it's great. It's a very, very necessary kind of service as well.
Now let's move into some of the tokenomic stuff. We could start with basically where the Jones token fits into the picture right now, outside of governance, because I feel like that's basically the low-hanging fruit. So where are we with Jones token right now? And then where do you see it going into the future, and what kind of key role will it play within the sort of Jones DAO ecosystem going forward?
So with the Jones token right now, it's, as you know, it's just a governance token. It'll have some utility in the future, but right now it's a governance token. It's got kind of high emissions, but in the coming weeks slash months, the emissions are actually going to drop by like 85% or even more as we implement the VE model. We have some kind of scaling system, some kind of, I guess, monetary, like, inflation controls built into the protocol, which kind of makes the, tokenomics and inflation proportional to certain, metrics within the protocol. Um, but yeah, so eventually Jones will become an extremely scarce asset, and it'll have a lot of fee distributions that it's entitled to. It'll even have some sort of bribing mechanism where veJONES holders can collect bribes. Um, it'll also be responsible for the governance powers of maybe executing new strategies on vaults or picking like a new strategy team or stuff within the DAO. And yeah, so it's going to be a very full-fledged tokenomics model.
And to the extent that you can share, what are some of the bribing ideas that have been floated around so far?
Yeah, sure. So in terms of bribing, right? Okay, first let's just take a step back and think about what kind of TVL would a platform like Dopex get if decentralized options really are the next thing, right? I mean, the meme numbers are literally in the trillions, so it's quite a big TAM. And then the next question is, what percentage of that TVL do you think is going to be routed through Jones? So that's a similar question to, like, okay, what's the total addressable market of something like Aave, and then what percentage of the total TVL is gonna pass through something like Yearn, or what's the TAM of Curve, and what percentage is gonna pass through like Convex, right? So this really comes back to, I think, I mean, I'm referencing Sammy again. I really liked his base plate thesis on the stuff, is that you don't simply build an app, you build a protocol which creates value for other systems and becomes a base plate in their operations. So in that regard, yeah, now let's talk about bribing mechanisms for veJONES. So assuming that, there's a huge chunk of TVL that comes through the kind of Jones platform flowing into various options exchanges, you have um a number of vaults, right? So for example, you have the synthetic LP vault that I mentioned before, and which basically, let's say, it sells like, a certain amount of options at certain strikes. Then you also have vaults which uh, perform a different purpose. Like maybe you have a risk on vault that it runs some kind of aggressive spread, like buying options, um and that also purchases calls or puts at certain strikes. So you have vaults both on the buy and the sell side, right? So the kind of bribing mechanism, I think, is quite a way down the line, and the narrative for why someone would want to bribe Jones is somewhat nascent. But so here it is. So Jones vaults basically have a buy and sell side component. Let's say you're a protocol. As a protocol, you normally incentivize like the spot DEX market for your token, right? Like you just send a bunch of emissions to your LP so people can trade. It's conceivable that in that sense, protocols would eventually also want to incentivize trading in markets related to derivatives and options. So let's say you're a protocol and you want to incentivize users to trade options, right? You want to incentivize liquidity in your token's option market. What you could do is you could bribe veJONES holders to vote for vaults um, around your token. So what that would do is, you could vote for veJONES holders to firstly create those vaults through governance, and then you could bribe those gauges so that Jones emissions go to your token's vaults on both the buy and sell side, and Jones becomes a kind of decentralized protocol, which becomes through, decentralized like incentives paid by other protocols, it becomes a kind of market maker, a kind of stimulant for the options markets of tokens. So yeah, the TLDR on that is if you're a protocol who in the same way you stimulate the trading index market of your token, if you're a protocol like that and you incentivize like liquidity in your DEX, it's not conceivable that in the distant or maybe even not so distant future, you might want to incentivize options liquidity for your token. And to do that, you would then bribe veJONES holders to kind of establish buy and sell side vaults around your tokens market. So yeah, that was kind of long-winded, but yeah, I think that's what it is. Like I said, it's a kind of nascent thesis. We don't know if it's going to work in practice or not, but it's kind of what we're discussing at the moment. It
Yeah,
might change, it
Let me,
might be completely different, but who knows?
yeah, that makes sense, and it paints a pretty clear picture. And as we approach the end of the conversation, I want to zoom all the way out and talk a little bit about just like DeFi alpha in general. So for anybody who follows you on Twitter, every once in a while you leak these different strategies that you found, whether it's the one where you levered up your butterfly position or you were getting insane APY on that, or not too long ago I saw some stablecoin yields that you were discussing. How do you approach finding yield in DeFi, or finding sort of alpha strategies? These strategies that are not super basic. Like what's your to the extent that you want to leak stuff, what's your kind of go-to way of constructing these ideas and strategies? Is it just a matter of research and then using previous knowledge, or is there some other methodology that you use there?
Bro, my answer on this is gonna be funny as fuck, but I swear it's 100% true. Like the biggest edge in DeFi is literally to like not be lazy and have half a brain and to just like read the docs. Like, bro, I swear, being on the side where now I'm contributing to a protocol and having to kind of interact with the community, you realize that, bro, like 99.999% of people don't even read the docs. So literally, if you read the docs for any protocol you come across, you literally find all the alpha. Like, bro, I don't know how I do it. Like, I'm really not like an incredibly intelligent person. Like, I'm just a normal DeFi DJ, and I just read the docs, man. Like, people just gotta go read the docs. That's all it is, bro.
No, that's that's extremely helpful. I mean, so if you want the alpha and you want the complex strategies, just read. Just try reading one or two times, and you might find something pretty useful. Sick. So I think we can wrap it up there. I got a lot of useful information out of this. Hopefully anybody who listens does as well. I'm really excited for what you guys are building. I mean, I'm pretty bullish on the sort of Dopex Jones DAO ecosystem, just because of the way that you guys are pushing innovation in the space in a way that many people are not. I think a lot of people in some ways have gotten complacent, and so I know you guys definitely haven't, and you're kind of pushing the boundaries of what people think is possible in this space. So I'm really excited for what you guys have coming in the pipeline. Is there any last shout outs you want to give before we wrap it up?
Big shout out to, bro, honestly, the community in DeFi. Like, y'all, like, it's great to build for this kind of community. Like, it's really fun, man. Like, I don't know how I ended up with this kind of job. Like, it's literally a dream job. Like, I really don't understand. You gotta understand that, like, in January, I was just doing like regular things. And then suddenly one week I go to like Ultra and like a bunch of people, I'm like, yo, listen, here's this idea. And then from then till now, we've basically worked like 16-hour days, like having barely slept, just like shipping and building and iterating. And bro, like it's been so fast paced. Like I literally don't fucking know how I got here. It feels crazy surreal, and it's just so fucking fun, man. I feel really blessed to be able to do this, and yeah, man. And bro, thanks to you as well. Um, I really do love your podcast. You're a great host, and I really enjoyed all these questions, man. We really need this kind of journalism and kind of info and breakdown of stuff, and this was an excellent experience for me. Thank you, man.
No, cool. I really appreciate it, and it's awesome that people like yourself take the time to even come on and share some of the information that you have, because I think like it's really important for people. I mean, we were joking about people not reading the docs earlier, but there is this aspect of like I think we do sometimes forget that normal people exist, and maybe they just like don't even know what docs are, but they do like podcasts because it's everything they want to know condensed down into about an hour. So I appreciate you taking the time.
Yeah, definitely. And just on that note, like yeah, I mean, yeah, like I'm empathetic to people. I do realize that like stuff is opaque. Reading the docs doesn't always get you anywhere. But I mean, there's a lot of great resources out there. Your podcast being one of them. Something I'd recommend to listeners who are tuning in and just want to get like up to speed on all of this stuff as soon as possible. Just go read Darren Lau's like Daily Ape Notion site. It's really comprehensive. I think it's the best DeFi resource I've found so far. Just go through it sequentially. You'll be up to speed in no time.
Yep, I agree. And there's always room for trolling, so it's always fun to like find a mix between trolling and trying to be helpful. So I think we struck a good balance. Cool, man. Well, thanks again for taking the time. Really enjoyed the conversation. Hope you have a good rest of your week/weekend.